Welcome back to CMC Markets Trend Tracker series. Today I'll be analysing three major currency pairs for you that have been trending pretty strongly over the last few weeks. The Aussie dollar, the dollar yen and dollar Canada. So let's get into it. We'll start off with Aussie dollar first. The first chart you can see is the Aussie dollar daily chart. I'm using the 20 and 50 EMAs. I've got the MACD down below. Now you can see here quite a strong downtrend has been in place since I last spoke a few weeks ago when the Aussie put in a double top formation. The Aussie has just fallen out of bed since then. You can see here the EMAs have crossed over and the yellow line is below the dark blue, which means the 20 EMA is below the 50 EMA, which suggests the downtrend continues to pick up momentum. MACD is saying a similar thing as well too. What are the reasons behind the Aussie dollar fall? Well, as we know, the Reserve Bank of Australia has been on hold with its interest rates. Chinese economic data has been underwhelming, and Chinese stimulus has been pretty soft as well too. So they're the key reasons why the Aussie has pulled back very, very strongly. Now, what to do from here? We're at 65 cents. It is a key technical level. As you can see, the Aussie last week has bounced off that 65 cents mark, and that's where we were back in May as well too. So pretty strong level here, pivotable as well too. Fundamental picture is very, very soft though for the Aussie. The trend is your friend, so stay with it. What will crystallise our thoughts in terms of taking further short positions in the Aussie this week or looking for a contrarian move. Some of the data this week we're coming out is the RBA minutes tomorrow. We've got the Australian Wage Price Index and also the big one, Australian employment data out this Thursday. So key things to focus on as we move ahead this week. The next currency pair is the dollar yen. Now you can see here the dollar yen in purple. I've popped on the Bollinger Bands as well, which are great to use in a trending market. You can see here that the dollar yen has been trending very strongly since most of this year. And what explains that fundamentally is rising US yields versus Japanese yields that have been stable for quite some time. Now, most recently, the Bank of Japan did tweak their yield curve control. So you've got the 10-year yields in Japan moved up slightly to 0.6%, but US long yields have moved higher as well. So that is a key reason why the dollar yen has now surged once more and is testing that 145, the figure level, key resistance level. So from here, it is important to work out, do you go long? Well, of course not. Got to wait for a break, clear break technically of 145, the figure. So keep your eye on that very pivotal level this week. Data out this week that might crystallise those thoughts for us. You've got US retail sales, IP, but in Japan, you do have GDP, trade balance, and the all-important CPI coming out as well too. I popped on the Bollinger Bands for you as well because you can see there in the middle of July when prices moved below the lower band, it was quite a good buy signal for this currency pair. And you'll see that the other crosses, cross yen, are also pushing higher as well too. So it might be quite a fruitful week for longs, but make sure you get confirmation first of all of a break of 145 the figure. Otherwise, look for pullbacks towards that 20 EMA and 50 EMA if you're trading dollar yen. And the last currency pair I wanted to cover here is the dollar Canada. And what I'd like to say here is quite a very important technical picture here. We have prices have bounced off that 131.20 support very, very strongly a few weeks ago. And now you can just see the EMAs crossing over as well. So that is another sign that, this uptrend we've been in dollar Canada has been picking up momentum. Again, US long yields have been pushing higher, and that is the main reason why dollar CAD is rising. The Canadian dollar in itself, we've had some pretty weak employment data the last week or so. So the labour market is cooling there, and it has caused a lot of money market traders and economists to think that the Bank of Canada may not be hiking any further this year. Now, if that is the case, then the Canadian dollar continues to weaken. But one thing I'll say is that at this level here, 134.50, it is held in pretty well in the last week, and again end of May where it topped prices. So it is a pivotal level as well too, 134.50. One thing I'll say for you this week, if you do see the US dollar coming back for whatever reason, whether it be softer data, the Canadian dollar may be one of the main currencies that gains against the US dollar, because you may have noticed that West Texas crude and Brent crude oil prices have increased by over 20% since the beginning of July. And therefore, that is quite a powerful supportive factor for the Canadian dollar. So keep your eye on that. The Canadian dollar is doing quite well on the crosses against the euro, against the sterling, against the Aussie and Kiwi, most definitely. But this currency pair here, dollar yen, you've got both currencies that are fairly strong. Keep an eye on oil prices this week and US dollar when you're looking to place trades on dollar Canada. So that concludes today's analysis. Thank you for watching. And if you like the content of this video, please subscribe below, add some comments. I'll get back to you, and I will see you in the next video.